Hello and welcome to today's video. Now in today's video we'll take a look at the news which is going to affect the stock market in general, and then also the Bank Nifty Expiry, as in what traders should do so as to make a profit in terms of option buying and also in terms of option selling. Now on the news front, I know a lot are still covering that the cabinet, this is happening, that is happening. I believe now that has come all news and everything has been priced in, so there is no effect that's going to come anymore from that unless there is a huge change in that aspect. Now we've gone back to the normal news front according to me, and so the thing which will be in focus is similar on the news front, similar to what I discussed yesterday. As yesterday I had said, this week the Federal Reserve basically meeting will be starting, and it has started today, and the markets will be looking ahead to what is going to happen on that front. That will be more important than anything. In fact, more than the comments, I believe the markets will be waiting for something called the dot plot. This dot plot will tell us how many rates cuts we can expect by the end of the year, and it will basically highlight to us if it's one rate cut which is expected next time, then that will be positive for the market, but it's already expected and most of that is priced in. However, if it comes to two rate cuts on the dot plot, then the markets will have a huge boost due to that. So people are going to be waiting for the comments from the Federal Reserve Chair. This time everyone knows most likely there's no cut, and then the dot plot. More importantly, the dot plot. Now, as of when I'm recording this at night, the American stocks are basically slightly negative, and also I'm seeing gold and oil is presently trading lower. The US dollar is firm ahead of this FOMC meeting, despite the yield going down, and then the euro has had a drop due to the post-election slide due to what has happened there, and the British pound is supported by the stronger wage growth, and Japanese yen is being supported by the stronger machine orders. So those two are doing well. So on the news front, that is really it. And now when we come to the index, now the Bank Nifty index has been trading within a range from the past, from Friday basically, from 3 trading sessions. As the last time even I had to update the levels which I send clients every day for trading Bank Nifty was I had updated on Thursday night. After then the levels have worked perfectly, and those are the levels which I'm even sharing today. Now when we pop on the levels on the chart, I've kept it on the 15-minute chart, and the whole of this week and even on Friday, from Friday to today, the resistance level I had shared with clients between 50.050 and 5200 has been doing its job and stopping the index from having any rise. And the support level at 49,600 has been doing its job and supporting the index from having a drop. So we have been just staying within this range, and that has been resulted in everyone having to do small trades. And in fact, we do hold a good chunk of option sales, me and clients, as we had entered them yesterday morning, and they're doing well as of now. Some of the expiry which is today, and then some for next week's expiry, and even some for monthly. So we're holding option sales across the different basically expiry dates. So now on the option selling front, how do I expect us to trade? Now I believe 50,200 is going to be a very strong resistance, and so that 50.050 to 5200 zone will keep causing trouble for us. So unless we break out above that, I don't expect much of a move on the upside. So I will feel safer if, as an intraday option trader for today, for expiry, to sell calls, as I believe the likelihood of a sharp rise is less. And even if you were to rise to the 5200, and let's say you have sold 50,000 and above, you're still going to expire in a good profit, as the decay will still hit the 50k ones. So that is how I'm looking at it. Will there be a risk of injections? Yes, as long as we are above 49,600, there will be a risk of sudden spikes towards 50.050 to 5200, which can cause a bit of a damage if you're not got all the profit stops and everything laid out. But if you do, then I think it will be good. So as an option seller's perspective, 50,050 to 5200 will continue holding its importance, and call sellers above this, above let's say 50,000 or 50,200 are golden. If you really want to take a cautious outlook, then above 50,380, so basically 5,400 and above, since BNF, Bank Nifty only has in 100 rupees the difference is, unlike the Nifty which has in 50. Now, as an option buyer, how am I going to trade it, day trade it? Since I'm going to do both, I do option selling and I do option buying. Now, on the option buying front, I believe between 49,600 and 50,050 to 5,200, there is no significant trade. So, as long as we are trading within this range, I will only be looking for smaller number of points, and I will not trade in the options expiring today on 12th June. This is if I trade in the options expiring on 12th June within this tight range, then I'm not going to make much because the decay is going to kill me. I'm already short on points as we are within a range, so I do not want the decay coming and also doing me in. So within this range, I will stick to options which are expiring next week on option buy. However, if we break below 49,600, then I believe we have a short opportunity to 49,450. And that is going to be a very important support on the downside. This is if we look at the chart simply in terms of price action, we have the 200-day moving average right below 49,450, and by the time we reach there, the 200-day moving average will have reached at 49,450, I believe, and so it will be a strong buttress. By chance we break 49,450, then is when I believe the real juicy move is going to come for option buyers, as we'll go to 49,280. That is a good support, but I don't think it will hold us, as we'll go down to 49,050 to 48,850. That is the key zone according to me in terms of support for option buyers on the downside. So on the downside, if we break 49,600, 49,450. If we break that, then a big move comes until 49,050 or 48,850. So on the downside, I'm looking at that. On the upside, I will only bother on a big upside trade if we clear 50,200. And that too, we don't have that much of a range because we'll go up to 5380 and we will start stalling there. Either if we go above 5380, we will go in a very slow fashion, or we will simply stall there. So I believe tomorrow as an option buyer, there's more opportunities on the downside than on the upside, provided 49,450 breaks. Between that, as I said, I will trade in for those smaller point moves. I'll trade in options expiring next week. If you break 49,450, then I'll also trade in options expiring today, as there will be speed which will come in, and that will end up profiting us as option buyers very well. Also, option sellers, as I said, 50,050 and 50,200 above, call sales will be safe. You can sell below 49,450, but there is a risk if a fall starts, you will get clobbered. So there is a risk for that, and I would stick more on the call side as of now, unless there's a change in the volume build-up, number one, and 50,200 bricks. That is only when I will start thinking about going to the put sales. So that's how I'm going to play it tomorrow. So anything else you want, do recommend below, and I will cover it in the upcoming videos. Thank you for watching, and hit the subscribe button and the like button. Thank you.